Assalamualaikum warahmatullahi wabarakatuh. We are from MAC 2403B. Today, we would like to do a group presentation on a case study NTK corporations. Here's the general overview where we will discuss on financial reporting analysis and ethical analysis using ADAP.
Assalamualaikum. My name is NABIHAH binti BOHAIRAH. My matric number is 2026121373. I will explain about FARS 15. So the issue is the term of the arrangement provide that Omega will pay NTK Corporation only after the goods have been successfully sold to end customer. Ahmad instructed the accountant to recognize the full revenue from the transaction. So what is MFRS 15? It is a 5-step model used to determine when and how much revenue to recognize, which is step 1, identify the contract with the customer. Step 2, identify the performance obligation in the contract. Step 3, determine the transaction price. And step 4, allocate the transaction price to each performance obligation. And last step, which is step 5, recognize revenue when performance obligation are satisfied. So, the core standard is revenue should only be recognized when the entity satisfies a performance obligation by transferring control of a promised good or service to a customer. So, the important is it prevents company from window dressing their accounts by recognizing sale before they are actually earned, ensuring a true and fair view of financial performance. The issue began when Ahmad, the director, pressured the accounting team to recognize the full revenue from the Omega trading deal. He insisted on doing this immediately upon delivery, even though the contract clearly states that NTK Corporation only gets paid after Omega sells the good to end customer. This was not a simple mistake. It was a pressure decision to ensure the company met the Zenith Bank loan covenant, which required up to keep our debt to equity ratio below 15%. Furthermore, Ahmad was motivated by personal and staff incentive as higher revenue figures were tied to employee bonus and compensation package. The impact of this decision is significant. By recognizing revenue prematurely, NTK's revenue and net profit are overstated, giving an illusion of success that has not actually been earned yet. More dangerously, this results in an understated debt-to-equity ratio. It makes the company look financially stable when, in reality, it might be breaching its loan term. This misled our primary stakeholder, Zenith Bank, and our investor by hiding the true financial risks. If the bank discovered this could demand immediate repayment of the entire loan, which could lead to the total closure of NTK Corporation. To comply with MFRS 15, NTK Corporation must immediately adjust the accounting treatment for the Omega trading transaction. Since Omega only pays us after selling the goods to end customer, this transaction should be classified as a consignment arrangement rather than a complete sale. Therefore, we must reverse the full revenue and the related costs of sale that were recorded in December 2025. We should only recognize this revenue when the performance obligation is truly satisfied, which is when the goods are finally sold to the
Assalamualaikum warahmatullahi wabarakatuh. My name is FAIQA MAHFUZAH binti FAIZUL. So I will be explaining MFRS 133 earning per share. The issue is additionally NTK issued a convertible debt to fund to the new project. Ahmad was confident this would not adversely affect EPS earning per share. So accordingly, the financial statement disclosed only the current EPS under MFRS 133 with minimal additional information. Although NTK disclosed basic EPS under the standard, the omission of diluted EPS from convertible debt raises concern. Okay, so what is MFRS 133? Used to measure the performance of the companies as it is an accounting ratio and making it easier for investors to compare the earnings power of different companies. The importance of MFRS 133 is It measures of an entity's performance, improve the performance comparison between different entities in the same accounting period and reporting period. The standard also ensures the companies disclose both current profitability and potential dilution. It also gives investor a fair and complete picture without mislead them. According to MFRS 133, EPS, we have to show or disclose basic EPS and also diluted EPS. So there are some reasons why Ahmad exclude to disclose diluted EPS. The first one is Ahmad want to maintain investor confidence by disclosing only the current EPS and omitting the diluted figure. Ahmad wants to create a good perception and also confidence of the investor. Ahmad wants to make the company appear more profitability than it would be. Second one is Ahmad want to comply with loan covenants. So since Ahmad is under pressure with to maintain a debt to equity ratio below 50% to comply with loan covenant from Zenith Bank, failure to meet the requirement would critically affect NTK financial health. So, by omitting the potential dilutive effect of the newly issued convertible debt, Ahmad wants to present a more stable financial position of NTK current state than what truly exists. So that's the reason why Ahmad wants to Ahmad did not disclose full disclosure of EPS under MFRS 133. So what is the effect from excluding the EPS, the diluted EPS? So by excluding the diluted EPS, the disclosure is incomplete according to the MFRS 123. This is because convertible debt can create potential ordinary share and diluted EPS is also mandatory under the standard. Other than that, it also can reduce the transparency and may mislead investor regarding the true earning per share. Ahmad has reached the capital market expectation due to the pressure to maintain the debt to equity ratio below 50%. As a director, Ahmad's concern is on a negative reaction in investor sentiment which could damage NTK's reputation. He wants the company to appear stable to potential new business partners and also current investors. Okay, so what are the solutions that we can do under MFRS 133 earning per share? So Ahmad can apply EMH efficient market hypothesis where he needs to fully disclose basic and diluted EPS in accordance with FRS 133 because it is mandatory to disclose both under the standard. So this is because why we apply EMH, because semi-strong form of EMH markets are assumed to reflect publicly available information including the financial statement, news release and also economic data. So analysts and regulators will find the convertible debt on the balance sheet and can calculate the missing data themselves. So Ahmad attempts on masking the missing data of diluted, for example, will not be useful because analysts and regulator can find the missing data.
Hello, my name is NURIN BINTI NAZRI and I will present about MFRS 116, Property, Plant and Equipment. The issue is, at the end of the year, Ahmad decided to revise the useful life of several high value assets at NTK manufacturing facility. This change was made without proper technical assessment or justification, reflecting the asset actual condition and usage. The newly hired accountant, ALIA, was instructed to adjust the financial record accordingly. What is MFRS 116? Property, plant and equipment are long-term assets that used for business operation and can generate future economic benefit on ongoing concern basis, and the cost of the PPE can be measured reliably. The importance of MFRS 116 it is to to help the business to recognize and measure the cost of long-term asset accurately and accordingly to correspond between the value of the asset and its contribution to the business. The NTK Corporation Berhad apply accrual earning management by revising the useful life of its asset. This reduced depreciation expenses, resulting in higher profit for the year and improving the company reported financial performance. Factor which affect and hence limit the useful life of PPE. For example, physical factor, wear and tear, technological factor, advancement of technology, economic factor, changes in market demand, and legal factor, such as right to use asset limited by time. The standard require the useful life of an asset should be reviewed at least at each financial year end. If there are significant changes in the pattern of consumption of the future economic benefit, the method should be according to MFRS 108, accounting policy estimates an error to match with the pattern of consumption. This is because the previous accounting estimates are no longer applicable. The changes are prospectively, meaning the changes in only for the current and future period. This happened because there is information asymmetry between the NTK's management and external party of the company. The external user cannot identify the manipulation due to the lack of information. There is also a moral hazard problem where Ahmad has the power to revise the useful life without justification and instruct ALIA to adjust the financial record to make the performance of the company greater. When Ahmad decided to reduce the expense, the company reputation and performance will increase due to the higher profit recorded. Under agency theory, Ahmad is the agent and shareholder of the company is the principal. This shows that Ahmad's decisions are for his own interest, which is presented over stated profit and not for the principal interest. Under debt covenant hypothesis, the higher profit recorded in the financial statement will prevent the risk of breach of covenant and interference from the lender. The profit stated in the financial record is higher than the actual amount because the financial statement does not reflect the actual amount of the depreciable asset due to the unreliable adjustment of the useful life of the asset. ALIA being at disadvantage. She had to sacrifice her self-consciousness when she prepared the financial statement without applying professional judgment as an accountant. Ahmad lacked both moral mindfulness and self-awareness because he is not aware of the impact from his decision of not properly revising the useful life, taking advantages of his higher position as the director to push his subordinate in a dilemma and deceive the stakeholder of the company. Ahmad must be responsible and apply integrity when making a decision regarding the financial report to present it as reliable and fair. So he must use proper assessment and technique in order to revalue the useful life of the asset more accurately. ALIA needs to develop a strong self-reflection by applying moral responsibility, justice, and integrity when preparing the financial record, even when upper management interference. For example, advising Ahmad that assets need a proper evaluation in determining their useful life.
Assalamualaikum, I'm SAFWANAH and I would like to present to you the issue of the financial statement prior to its authorization. It seems our director Ahmad instructed ALIA to omit alpha text bankruptcy from the report. This goes against the standard of MFRS 110 titled Events After Reporting Period. This standard defines as those events both favorable and unfavorable that occur between the event of the reporting period and the date when the financial statements are authorized for issue. This is to ensure the integrity of the financial statement to report on the financial health of the business. Debtor's bankruptcy is a classic case of an adjusting event as it will affect the net profit of the entity. So, why was it excluded? Two reasons. First, company's expansion plan, where a sudden drop of profitability would ruin NTK's creditworthiness and scare away potential investors, hindering their capital to expand the company. Second, to meet loan covenants. When net profit and current assets plummet, this will likely breach their debt-to-equity ratio required by Zenith Bank. You might be asking, how is this possible? Well, Ahmad explained information asymmetry, where he has more knowledge on the true state of the company compared to stakeholders. This can falsely represent financial data and can mislead stakeholders and will cause them to lose confidence in management's integrity, resulting in decline of stock values. Therefore, we move on to the solutions. It is best if Ahmad is aware of his motivation, while ALIA focuses on her growth and integrity as an accountant. By this, ALIA should disclose the debtor's bankruptcy and make adjustment for an accurate financial statement. It is their duty to be responsible and have great consciousness to build trust and transparency with the stockholders.
Assalamualaikum, I'm INSYIRAH and I will present an ethical analysis of the financial reporting decision made by our Director Ahmad using the ADAP framework. Let's start with NIAT. In preparing NTK financial report, Ahmad primarily focus was on maintaining a debt to equity ratio below 50%, presenting a higher earning per share and increasing employee compensation. Because of this performance target, Ahmad faced heavy management pressure. Unfortunately, this pressure caused him to neglect compliance with MFRS and failed to present a true and fair view of company financial status. The next one is ikhtiar. To hit those company target, Ahmad showed a lack of professional effort and ethical conduct. He failed to properly assess revenue recognition under MFRS 50, revise the useful life of asset without any technical assessment, ignore diluted APS requirement under MFRS 133, and completely left out of tax bankruptcy, which goes against MFRS 110. The third one, amanah. Ahmad's decision directly breached his fiduciary duty as a director. The bank and stakeholder heavily relied on this report to make important decisions. However, the statement provided were highly inaccurate. Revenue was overstated, depreciation was understated, EPS information was incomplete, and crucial events after the reporting period were omitted. On top of that, Ahmad instructed his accountant ALIA to make this wrong adjustment. For muraqabah, Ahmad need to strengthen his conscience, otherwise it could undermine the trust of the company, bank and stakeholder and not honest with Allah in carrying out of the work. Finally, natijah. While this report might look great on paper, showing high profit and keeping up with loan covenant to boost investor confidence, the reality is actually lack of transparency. This leads to misleading financial statement, a complete loss of trust and potential legal actions. Now, to resolve this, we look at the step OTUR3. First, observe. As a director, Ahmad must carefully identify and observe the correct accounting standard. He must understand the managing earnings must strictly follow accounting rules rather than manipulating them to his target. Second, think. Once the issues are identified, Ahmad needs to devise an appropriate strategy that fully complies with relevant accounting standard. This step is vital to solve ethical conflict. Third, understand. Ahmad has to grasp that every single adjustment must follow MFRS. For instance, he cannot simply record current EPS without calculating complete EPS as required by MFRS 133. This understanding is the only way to ensure the financial statements are presented fairly. Fourth, remember, Ahmad must aware that he is committed to present honest financial report to banks and stakeholders. They have placed their full trust on his report. Fifth, reflect. Ahmad must regularly review the company financial report against MFRS. This ensures that everything reported is accountably and free from manipulation. Lastly, remorse. Ahmad must be ready to rectify any reporting error immediately. Next, let us examine the ethical dilemma faced by the accountant ALIA. Under NIAT, ALIA honestly intends to carry out her duty at NTK Corporation Berhad according to professional and ethical standard. However, because she is still within her probationary period, all her tasks remain under Director Ahmad's supervision. Next one, ikhtiar. The intense pressure to complete her probation inclines her to follow Ahmad's instruction over proper accounting standard. ALIA knows she should have applied MFRS 50 for revenue, MFRS 116 for asset useful life, MFRS 133 for EPS, and MFRS 110 for alpha type bankruptcy. Yet, she still complied with Ahmad's instruction. Looking at Amanah, ALIA failed to fulfill her duty as an accountant. She neglected integrity and accountability despite knowing the recorded treatment were completely inappropriate for bank and stakeholder. For Muraqabah, ALIA need to exercise better self-awareness. Every decision demands total honesty not only toward her director but also toward Allah, especially since external party rely on this report. Finally, the natijah of complying with Ahmad instruction is highly damaging. The financial statement will contain material misstatement and mislead stakeholder and bank. Consequently, ALIA will face severe issue and her professional reputation will slowly decrease. To resolve this dilemma, we apply OTUR3. First, observe. As a newcomer, ALIA must observe NTK operation and past financial statement. Using her professional knowledge, she supposed identify the Ahmad instruction to recognize revenue prematurely, alter asset useful life without evidence, disclose only basic EPS, and omit to bankruptcy violated MFRS, creating a misleading presentation. Next thing, she had to devise a strategy to resolve this ethical dilemma. She need to choose between simply following her director or complying with MFRS because she might feel Ahmad will reject her view since she was still on probation. Third is understand. ALIA must understand that her true role is to present a true and fair view using professional judgment, not blindly follow instruction only. Fourth, remember, even though she is under the company's supervision, this does not mean that she lost her right to apply professional ethics as to prevent the legal issues. Fifth, reflect. She should reflect on whether this accounting treatment faithfully represents the company's actual position. Lastly, remorse, which dictate that if her practical judgment is incorrect, ALIA must take immediate action. She might be still new in industry, but this is her obligation to cooperate fully as an accountant.
I now will move on to the recommendations to resolve the ethical issue and its justification. First of all, as an accountant that must adhere to the standards, ALIA must refuse those instructions by her director and instead escalate the matter to her chief financial officer or the audit committee. This promotes a transparent and responsible reporting culture where governance is valued. This also prevents recurring fraud or error in NTK. Second of all, to ensure objectivity, NTK can establish an anonymous third-party managed reporting channel directly to the audit committee. This can serve as a support for employees to hold up their integrity without having to fear their job will be on the line. And finally, the business should hold a mandatory annual training on International Ethics Standards Board for Accountants, or you will say IESBA Code of Ethics, that is enforced through the Malaysian Institute of Accountants. This makes sure the team is updated on changing accounting standards while ensuring reporting remains legally compliant. In conclusions, although there were attempts to maneuver around the standards using earning management tactics and hoping to present NTK in a positive view to the stakeholders, however, it comes with serious effects that could hurt the company in the long run both economically and ethically. Therefore, abiding to the standards, implementing good and ethical practices for both as individually and collectively can improve the business as a whole alongside integrity with the owners.